What are your thoughts on the idea that a shift is coming back towards value stocks away from growth stocks?
Well, we've been saying this for the last couple of years, and we've been proven wrong for a long time in the sense that, the market has just continued to value growth. In the absence of economic growth, they're looking for growth in their own way. And the assumption is that stocks that are cheap will be cheap for a long enough time that I can get back into them down the road. So there's no rush to go and buy these companies that are cheap. And they've stayed cheap and, potentially, and there's been periods where, like 2016, where value really picked up. And when it does, it picks really quickly. So, for example, month to date, we've seen value in the last bit pick up again. Yeah. And actually, over year to date, value's actually kept up with growth, which has been good. But, it still is, you're seeing a really big disparity between the expensive companies and the relatively attractive cheap companies. So when will this happen? When you really see the momentum trade come off the rails, which has been working for the last 5-6 years really, really well, you'll see a rotation to value just by virtue of that. We're seeing a little bit of it right now, but whether it's persistent is going to be a question mark, and I don't know yet. It'll all depend on how this market trails. But right now, if I'm an investor, if I'm thinking about where my dollar is going to be, I would be taking my profits from the high growth momentum areas and buying more value than I would be going the opposite way.
Tell me one or two of what you think are the most important alternative strategies right now.
So the sort of two areas that I think are the most important, as I said, is fixed income. Yeah. So looking at things like, kind of investment grade that is alternative focused, duration and credit, strategic kind of go anywhere type of bond allocation. So Sandy runs a strategic yield fund, which is really important like that. So those types of concepts, floating rate strategies that are run really well are very important. The second concept then is when I think about like something like a premium yield strategy, which, is very much around how do you take, put option writing on the stocks you love and really use that as a very disciplined way to generate your return. Those are two of our favorite areas. And we also think that, a good disciplined, low beta, when I say low beta, not like low volatility strategies, like you see some of these things, which are just long stocks, like low, beta hedging strategy. So meaning that they're long short, they're taking risk off the table, they're reducing the risk of the markets, and their goal is to generate a return that's more like 6 or 7% long term, but with a different risk profile, like more like 0.5, 0.6 of the market risk. Those types of concepts are really, really important right now in portfolio construction. And I think, as we think about this toppiness of the markets, I think people will be rewarded for being more risk adverse right now than they would be on taking risk taking at this market.